So we're now on a question which looking at the statement of financial position. So we can see that the question has actually asked us to carry out straight line depreciation method on the non-current assets. We can see we've got a space provided for the depreciation and the amount that will actually be carried forward as what will become our total non-current assets figure. So using this figure 10%, it's nice and straightforward. The examiner's been quite kind to us there in terms of the actual amount, so we don't really need a calculator here. We can see 10,800 and then we've got this 1,080, which of course 10%. Moreover, for the equipment, we've got 4,000. Well, that's going to amount to a 10% depreciation rate of 400. So now we just need to subtract 10,800 from 10,800, 1,080, and that will give us what, 9,720. Moreover, the equipment will give us what, 3,600. So then we can simply work through this and complete the missing total here, which will work out at what, 13,320. Okay, so once again, fairly straightforward as long as you're au fait with conducting that depreciation. That's relatively straightforward to handle that. Now let's come down and see what we've got in terms of the actual cash and cash equivalents, because we can see that we've got a missing amount here, and this is asking for us to actually complete the entirety of this statement of financial position. So what can we see? Well, we've obviously got a total here of what, 2,112, and the missing amount must therefore be represented by the cash and cash equivalents. Okay, so to work this out, all we've got to do, and let's just see if we can show it on our calculator here, is, let's just bring that in. So we can see that we've got 11,872, and if we just subtract 1,400 and the 712, then we can see that we're down to what, 9,760. So that would tell us that that missing amount is 9,760. Okay, so we can now move on again, and we can now look at the actual net current assets figure. So the net current assets, simply a matter of taking your current assets and subtracting your current liabilities there. So let's just work through that one. Again, it's nice and straightforward. I'll just show you on the calculator there. So you've got 11,872 minus 472. So that amounts therefore to 11,400. And that's looking all right. So we can now move the paper up so we can see these amounts down here. Now we've got a figure that we need to input for our net assets. Okay, right, so now to actually do this, all we've got to do is take 13,320 for our non-current assets total, and then if we just use this figure that we've calculated for our net current assets, because this net current assets figure, remember, has already subtracted our current liabilities from our current assets, so then we just add that figure on, 11,400. There it is, okay, 24,720, and then we subtract 8,000, of course. So that will therefore give us 16,720. So again, not too bad as long as you know what you're doing. Okay, so you've just got to be clear on how to actually calculate these different amounts here. Here we've got opening capital, so that's money introduced to the business, of course, profit for the year, so those two would obviously get added together. So that's money retained within the business, and then we've got less drawings. So this is of course money taken out of the business. So if you add those two together and then deduct the 6,000, well, lo and behold, you get 16,720. Okay, now that is good enough for 7 out of 8 now. To get that 8th mark, what do you need to do? Well, of course, you've got to refer to this bit in the case study here, which is saying it's 31st December 2016. And that's really just encouraging you to be aware of the fact that the statement of financial position is a statement on a given day. So there we go. That's 8 out of 8 now. Looking very nice.